Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks edge higher along with U.S. futures following data that reinforce bets on Fed rate cuts this year. U.S. Secretary of State Marco Rubio says Europe's fate is intertwined with the U.S. while faulting the continent for drifting from their shared Western values. The yen weakens after Japan's fourth quarter GDP misses estimates, boosting the case for Prime Minister Takaichi's proactive spending policies. Well, happy Monday, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Just a reminder that we are in Lunar New Year right now, so many of these Asian markets are going to be closed. China's closed for, I believe, as much as 11 days back to back. We had a half day of trading in Hong Kong today, Singapore too. So thin liquidity coming through from the Asia session. But of course, Friday, the big focus was on U.S. CPI, the data coming in slightly softer than expectations, 2.4% year on year versus estimates of 2.5%. And so on the back of that, we saw the mildly dovish repricing of the interest rate curve in the U.S. Today, S&P futures leaning towards positive. It's also a holiday in the U.S. today. It's President's Day. So again, it's going to be probably a thinner trading day than usual. USD slightly positive this morning, up about 7 basis points despite investors trimming their expectations for, or I should say adding to their expectations for rate cuts for this year. But we are seeing a bit of a push for the USD this morning. And then gold slipping somewhat, down 1.3%. After that data came through on Friday. And then European markets, as we head into the European session, up 10 basis points, a real focus on geopolitics, as well as some of the takeaways from the Munich Security Conference. We're going to be talking about that in a short while. But just switching over to give you some more context just on the CPI figures that came through from the U.S. And you can see here that the core CPI month-on-month gains continue to be quite muted in the U.S., the latest figure coming in at 0.2% month on month. And you can see that this is essentially means that the super core, which is if you strip down the inflation baskets and remove all of the volatile components, we're actually around 2%, which is obviously where the Fed would want it to be. But that's if you strip away some of the volatile components. So muted inflation, which no doubt is music to the ears of the central bank and, of course, to President Trump, which would like to see the Fed cut interest rates. So something to bear in mind on back of the data that came through on Friday. Well, for more market insights, joining us now is Vincent Juvyns, Chief Investment Strategist at ING Belgium. Maybe let's just start with the macro, given that's how I started off the show. Vincent, how are you thinking about the inflation data and the bearings it might have on the Fed's interest rate cut trajectory this year?
But Jumana, this lower than expected inflation print is music to the ear of investor as well, because you still have a very strong economy together with declining inflation. And as you said, a flash estimate of inflation in the US or high frequency even point to lower inflation underneath. So that's obviously positive for the rate outlook. Market are still pretty much expecting 2 rate cuts in 2026. So this is really something which should continue to support equity market going forward. So a Goldilocks economy, as we like to describe it.
Okay, so Goldilocks economy, what about the tech wreck that's taken place the last couple of weeks? A real repricing, reevaluation of some of the earnings growth profiles that factor into many of these stocks in the tech space, software stocks included. How are you thinking about the opportunity there, and would you buy the dip?
Yes, we do, although very selectively and in a very diversified way. It's not the first time that AI development lead to market thinking that a sector, a company, or an industry is dead. We've seen the same with the launch of ChatGPT. People thought back then that Google would become irrelevant. We see that Google is still pretty much alive and kicking. The same was said when DeepSeek was launched in China. Memory chip would no longer be so important, or NVIDIA chips, and we've seen seen the semiconductor continue to thrive in the meantime. This said, it is a warning, obviously, that the AI wave is unlikely to benefit everyone in the next coming months. So it's definitely a reminder that playing AI and the current market environment is for active manager more than ever. But we're inclined to buy the dip. Definitely when you look at this disconnect between the earnings momentum, even in software, which is pretty strong, continue to deliver more than what the market expect and more than the market overall. And you see these price development which have been declined. So as usual, we shouldn't throw the baby away with the bathwater. We should stay invested, but selectively. There's many ways to play AI. It's not always software. We play it with utilities, we play it with bank, we play it with healthcare in our portfolio.
Okay, I want to pick you up on banks. And I see in your research note that you're quite constructive still on the outlook for banks. Two things I want to say. In the U.S. so far, it hasn't been a great start to the year for the U.S. banks, especially the commercial banks, with talks from the Trump administration about capping credit card fees and so forth. So that's a headwind. And then European banks are coming off a stellar year in 2025. Some of the stocks in the basket were up 70, 80%. Can you get a repeat of that in 2026? So what's driving your optimism still this year around the banking sector?
Well, in the US, it's true that there have been potential regulatory headwind, as you mentioned, with this cap on credit card trade. But at the same time, I've heard a lot of Wall Street CEO expressing their enthusiasm about the possible deregulation wave, which may come in the US in the coming month. And that should be obviously massive to support bank earnings. Obviously, lower interest rate will fuel, obviously, demand for mortgages and so on. So we could still, in an economy which is doing well, expect a relatively positive environment for big banks in the US. In Europe, it's true that repricing has been operated last year quite substantially. But when you look at valuation of European banks, they're still very low by historical standard versus their peers. They're hovering at the moment around 1 time price to book. And you have a continent which is not in a recession, where you see credit demand increasing and when you see a steep yield curve. So you have all the ingredients for positive earnings growth in Europe. And again, a banking sector which is trading at a PE of roughly 11, 12 times earnings at the moment.
I was going to ask you about the steeper yield curve. That seems to be one consensus view going into this year. How much of the banking trade is predicated on the steepness of that yield curve?
Well, obviously, a bank take their margin on the steepness of the yield curve, for sure. This has been one of the tailwind the banking sector in Europe has enjoyed over the last couple of months. But it's not the only thing. You see in Europe that there are other catalysts, obviously, to drive revenue up. I was thinking to my own business, which is obviously the fee-generating business through asset management, through private banking service, which is also getting traction. I guess for European, it's clear that saving alone is no longer the only solution in a world where inflation stays around 2%. And you see that these savings are more and more channeled towards investment. So we see that definitely fee business in Europe is getting traction as well. And at ING for us, it's very important. And it was also seen in our own earnings.
Yeah, it was. Vincent Juvyns, always good to chat to you. Thank you so much for coming on our show. Chief Investment Strategist at ING Belgium. Well, coming up, as the yen weakens, we discuss the Japanese economy after GDP data. That's next. This is Bloomberg.
The Vice President said last year very clearly was that Europe had made a series of decisions internally that were threatening to the alliance and ultimately to themselves, not because we hate Europe or we don't like Europeans, but because what is it that we fight for? What is it that binds us together? And ultimately, it's the fact that we are both heirs to the same civilization, and it's a great civilization, and it's one we should be proud of. It's one that's contributed extraordinarily to the world, and it's one, frankly, upon which America is built.
U.S. Secretary of State Marco Rubio speaking exclusively to Bloomberg's editor-in-chief John Micklethwaite at the Munich Security Conference. Now, U.S. Secretary of State Marco Rubio has downplayed the chances of a fracture in the U.S. and European alliance if Ukraine loses the war with Russia.
The Russians are losing 7,000 to 8,000 soldiers a week. A week. Yeah, not wounded, dead. Ukraine has suffered extraordinary damage, including, overnight, and again, to its energy infrastructure, and it will take billions of dollars and years to rebuild that country. So I don't think anyone can claim to be winning it. I think that both sides are suffering tremendous damage, and we'd like to see the war come to an end. It's a senseless war. In our view, the president believes that very deeply. He believes the war would have never happened had he been president at the time. So we're doing two things. So obviously we continue. Look, we don't provide arms to Russia. We provide arms to Ukraine. We don't sanction Ukraine. We sanction Russia. But at the same time, we find ourselves in a unique position of serving as probably the only nation on earth that can bring the two sides to discuss the potential for ending this war on negotiated terms. And it's an obligation we won't walk away from, because we think it's a very unique one to have. It may not come to fruition, unfortunately. I hope it does, and I think there are days when I feel more optimistic about it than others. But we're going to keep trying, because that is, in the end, this war will not be solved militarily. It will be, in the end, it will come to a negotiated settlement. We'd like to see that happen as soon as possible.
Do you worry that if Ukraine loses the war, it's going to be a disaster for the transatlantic relationship? Because Americans will say the Europeans didn't provide enough arms, and Europeans will look and remember the meeting in the White House and Zelensky and Trump, and they will blame the other way.
That would ignore reality. Look, Ukraine, first of all, they deserve a lot of credit. They fought very bravely. They've received extraordinary amount of support from the United States to the tune of billions of dollars that pre-exist the war. In fact, Ukraine probably wouldn't have survived the early days of the war had it not been for American aid that came to them even before the war had started, with the Javelin missiles that disabled the tank formations.
I wasn't saying it was fair. I was just saying there's a possibility. You have to deal with perceptions.
No, but I'm not worried about that, because I can tell you that I think history will understand that. But I don't think the war is going to end in a traditional loss in the way people think.
U.S. Secretary of State Marco Rubio speaking exclusively with Bloomberg News editor-in-chief John Micklethwaite in Munich. Now for a look at some of the other stories we're following today. Dubai's government has appointed Isa Kazim as chairman of DP World, an executive who holds several roles at the heart of Dubai's financial sector and one with a track record in handling delicate situations. This after Chief Executive Sultan Ahmed bin Sulayem resigned after his alleged links to disgraced financier Jeffrey Epstein emerged. Yuvraj Narayan will take over as DP World's CEO. U.S. President Donald Trump says founding member countries of his Board of Peace have pledged more than $5 billion towards humanitarian efforts and reconstruction in Gaza. In a Truth Social post, Trump says board members are due to meet this week in Washington to confirm pledges and commit, quote, thousands of personnel to a stabilization force. The Trump administration asked countries to contribute at least $1 billion for a permanent seat on the board. Israeli Prime Minister Benjamin Netanyahu has proposed terms for any de-escalation deal with Iran during a meeting with U.S. President Donald Trump. This includes that Iran should not possess enriched material or nuclear enrichment capabilities. Netanyahu also suggested limiting the range of Iranian ballistic missiles. The U.S. and Iran are expected to hold a second round of talks in Geneva later this week. The yen softening after Japan's GDP came in much weaker than expected. It underscores the case for Prime Minister Sanae Takaichi's proactive spending policies following her election triumph. Let's get more now with Bloomberg's Asia Equities Deputy Managing Editor Balazs Benz. Balazs, obviously Japan has been very much in the news over the last couple of weeks, but this GDP this morning, a bit of a surprise to the downside, and obviously also has implications on the Bank of Japan, perhaps raises the bar for them to truly start with or continue with the interest rate hiking cycle.
That's correct, Jumana. This GDP number was much lower than what analysts expected. And remember, this comes on the back of a previous quarter where we saw a relatively deep contraction. So as you mentioned, this kind of underscores the idea that the Japanese government will have to step up spending to keep the economy growing, to boost that growth a little bit. This is what has become known as the Takaichi trade, which has been a boon to stocks and has weighed on the yen and bonds a little bit. When it comes to the Bank of Japan, what we have been hearing so far from market observers, from analysts, is that this probably will not prevent the BOJ from raising rates again. So that side of the equation still looks to be stable. I mean, when we look at this particular figure that just came out, it looks like it's domestic spending that was a little bit weaker. There were some technical reasons behind it, but the overall picture remains the same, which is that everybody expects the government to step up spending.
Yeah, and also I want to take you down a different tack, Balazs. This story came out on Friday, and Chinese stocks are closed over the next week or so. But Alibaba, amongst others, were some of the companies added to a Pentagon list that was later withdrawn. What are the details, and what is the significance of being added to that list? And what do we know about the ramifications in some of these big tech Chinese companies?
That's right, Joanna. These are some of the biggest Chinese companies. Alibaba, Baidu, BYD were among them. They were added to a list by the Pentagon as companies that are cooperating with the Chinese military. Now, this list in and of itself does not lead to any kind of action, but it can make it more difficult for U.S. companies to work with these Chinese counterparts. And this could be a way to kind of pave the way to more severe action, to some sanctions on these companies. So right now, nothing happens. And as you said, this list was later withdrawn. We're not exactly sure what's happening there, but it sounds like there are some internal deliberations within the White House about which companies should and should not be on the list. One of the sectors that we're very closely watching when it comes to that is the memory chip industry, whether those companies will be added or taken off that list. But it certainly does look like the Pentagon, the U.S. government is preparing for something to maybe to send a message before the much-awaited meeting between President Trump and President Xi in April.
Yeah. Bloomberg's Asia Equities Deputy Managing Editor Balazs Pence, thank you so much for the overview. Now, coming up, the dramatic sell-off in cocoa prices is shaking up West Africa's cocoa industry. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, let's talk cocoa. Cocoa's dramatic boom and bust is beginning to reshape how markets in West Africa operate. With prices tumbling from record highs, countries like Ghana are moving to loosen its long-standing state control over domestic pricing, a shift that could have global implications. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. This is such an interesting story, Jen, because it just shows how countries that are reliant on a single commodity are also subject to the fluctuations in prices of that commodity. At one point, cocoa prices reached an all-time high, plummeted 70%. Just this year alone, prices are down 40%. Yeah. So what is Ghana proposing now in terms of cocoa pricing and managing it more effectively?
We've spoken over the past few months and year about just how high the prices of cocoa had gone. And a lot of the question was about whether or not this was actually reaching the farmers. Come to find out, a lot of the boom and bust was really not actually benefiting a lot of the system. And so what we did hear from the Ghanaian government last week, they held this emergency meeting and they're hoping that they are going to actually reset what has been a really volatile market in terms of the cocoa price. So they're going to cut the price of cocoa for the rest of the 2025 season, and they're hoping that will align it better and more closely to what the international market is looking like. But not just that, they're also hoping that will inject immediate liquidity into the system. The problem with what we saw previously is that these high prices in these forward contracts were not able to be fulfilled in many cases. And so many of these exporters were not actually able to sell these prices because they had gotten so high at one point. And so a lot of the farmers didn't actually end up benefiting from what these high prices were. And so the Ghanaian government is hoping to potentially shield the system entirely from some of this volatility. So I mentioned they're adjusting the price for the rest of the season. They're also introducing a flexible financing system, is what they're calling it, which then will allow for automatic domestic price adjustments when we do see some of these fluctuations on the international international market. They're also potentially going to offer domestic cocoa bonds that will allow farmers to get paid immediately when we do see some of these fluctuations happening. But then also it will allow them to raise funds just given what the season looks like, because the issue with some of these forward contracts is that they happen so far ahead to when they're actually sold, right? Of course, that's how it works. And so this is still subject to parliamentary approval, but still many people are looking at this and saying that this could be a seismic shift for West Africa and for the cocoa market more broadly.
And the thing is, cocoa forms a key pillar of Ghanaian exports. So how significant is this pricing shift going to be for people's livelihoods? And here I'm talking about farmers, families, traders. What are the knock-on effects?
Yeah, the issue was this was, again, as I mentioned, not benefiting a lot of the people along the value chain, as you just mentioned there. And so the hope is that this will not only shield a lot of the exporters, the regulators, and also the farmers from some of the volatility, but it will also potentially benefit them when they're, or actually inject a bit of stability there. Remember, we should say Ghana is the world's second largest producer of the crop. Ivory Coast is the world's largest producer of the crop. And so any sort of decision making will be closely watched by the market. When we saw the surge happening, it had gotten to $13,000 per ton in 2024 and then dropped to about a 70% collapse. And so potentially then farmers will be able to, if in fact this does get approved, farmers will be able to withstand, be paid regardless of what we're seeing, some of the volatility in the markets. And also the government will be able to, and the cocoa regulator will be able to better manage the system. And potentially we see Ivory Coast and some of the others within the system following suit.
Jen, thank you so much. Jennifer Zabazaj, our chief Africa correspondent in Johannesburg. Now for a look at some of the other stories we're following today. Azul Energy, the joint venture between Eni and BP, says it's made a major offshore oil discovery in Angola that could hold as much as 500 million barrels of crude. The country has been battling declining output for years, and this discovery could help stabilize production for Africa's third largest oil producer. Senegal has secured a $747 million trade finance facility from the International Islamic Trade Finance Corporation. The deal will help bolster funding for imports of essential commodities such as fuel and exports of groundnuts and other crops. The facility is part of a broader 5-year framework that was agreed in 2025 to shore up key sectors of Senegal's economy. And a look at markets. A thin liquidity day today, President's Day in the U.S. Many Asian markets are closed for the lunar holiday. S&P futures, which are not going to be trading in cash terms today, they will start trading again tomorrow, are leaning green, up 0.2%. European markets positive as well. Coming up, we're going to be speaking commodities with Guy Wolf, Global Head of Market Analytics at Marex. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks edge higher along with U.S. futures following data that reinforced bets on Fed rate cuts this year. U.S. Secretary of State Marco Rubio says Europe's fate is intertwined with the U.S. while faulting the continent for drifting from their shared Western values. The yen weakens after Japan's fourth quarter GDP misses estimates, boosting the case for Prime Minister Sanae Takaichi's proactive spending policies. And it's just gone 9:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Bit quieter than usual today. It is President's Day in the U.S. and, of course, it is the Lunar New Year holiday in Asia, which means many of these markets are closed today. Chinese markets going to be closed for at least the next week of trading. So you're not going to get a lot of signals coming through from Asia Pacific. But, of course, it is the main outperforming part of the world. Geographically, MSCI index, Asia Pacific is up around 11% year to date already. So with that in mind, today we've got S&P futures leaning towards positive. Cash trading is not going to open until Tuesday. We did have CPI numbers come through Friday, slightly softer than expectations, still around 2.4% year on year, but perhaps was welcome news for anyone hoping, markets, investors, President Trump, for more interest rate cuts being priced into the U.S. curve. There are about 60 basis points worth of rate cuts now priced in by the end of this year. USD gaining a bit of ground this morning. We are up 7 basis points, so reclaiming a bit of the ground lost towards the end of last week. And then gold slipping below 5,000 today. We are down 1%. We're going to talk more about all of the price action in precious metals and industrial metals in just a moment. And then European markets also leaning towards positive as we continue with earnings season. And, of course, geopolitical ramifications, keeping a close eye on some of the sound that has come through from the Munich Security Conference, with that perhaps more conciliatory speech from Secretary of State Marco Rubio, but with some warning still to Europe. And switching over just to show the CPI trends in the U.S. Remember, last week we had two really important bits of data come through. We had the jobs print, which surprised to the upside and was reflective of perhaps a more robust U.S. jobs market. But at the same time, what we are seeing is slightly easier, slightly softer inflation. And if you strip out all of the volatile components, food, energy, etc., what you get is the super core, which is getting closer and closer to around 2%. I mean, we're still not there, but ultimately we're drifting lower and lower. And this, again, could be perceived to be impetus for those that would like to see a more dovish Fed. So we'll see how all of this weighs up in the latter half of the year. But for now, a lot of the commentary coming out of the Fed has been slightly more hawkish as of late. Okay, let's talk more about some of the price action in metals. Gold, as I just mentioned, has dipped below $5,000 an ounce as traders booked profits from a gain in the previous session off the back of mild U.S. inflation data. But many banks expect gold to resume its upward trend, arguing that the drivers behind a multi-year rally remain in place, including geopolitical tensions. Joining us is Guy Wolf, Global Head of Market Analytics at Marex. Well, who would have thought there'd be so much attention and focus on precious metals and industrial metals this year? There's a lot going on. But the way I see it is it's a confluence of factors, right? So you've got the de-dollarization trends, you've got geopolitics, you've got potentially interest rate cuts to come as well. How is that all being factored in to the excitement around precious metals here?
Well, as you say, there are several kind of mega themes going on. Reglobalization, as I call it, which is first the pandemic, then Ukraine, Russia, and now the tariff war. So people are looking to diversify supply chains, and that's causing disruption. The de-fiatization, I don't think it's just about the dollar, because precious metals have gone up in every currency.
Right.
Apart from the Swiss franc, I think that the worries people have around the dollar, i.e. aging population, too much debt, fiscal deficit, you could probably level at every other major currency. And then, of course, the sort of secular demand themes of either AI or the energy transition, which is still very real. The energy transition, maybe not in the US, but is still very real elsewhere. So all of these factors, precious metals and base metals are very much at the epicenter of.
Yeah. And are there any metals, specifically industrial metals, that are more susceptible to a supply squeeze than others in this environment?
Yes. Well, I mean, copper and silver have been really, I guess, the focal points.
Yeah.
They're both been subject to this issue of material being trapped in the US because of fears of tariffs. And that causes shortages elsewhere. They're both quite important metals for the energy transition and electronics and solar. So both of them have been very much at the epicenter of everything. And more recently, aluminium is going to come into focus because the US has been reducing its domestic production of aluminium for decades, really. And now it has been, now it imports the vast majority of its aluminium from Canada and Mexico.
Yeah.
So the imposition of the tariffs by the Trump administration are causing serious issues.
Yeah,
for
and on
US consumers.
Friday, of course, the FT were reporting that they were considering repealing or reducing some of the tariffs on aluminum and steel imports. Let me just ask you, how much are tariff headlines driving activity in your space, though?
They absolutely are. They're hard to predict.
Yeah.
I think it's fair to say that there's a certain level of fatigue, and what gets announced isn't always what gets implemented. The US aluminium situation is an interesting one because prior to the tariffs being implemented, there was an enormous amount of material obviously brought across the border in anticipation. That stock is now running out, and simply put, the US industry can't afford to pay those kind of prices because I think we all acknowledge that the importer pays when it comes to what's called an import duty. It's effectively just a big sales tax.
Yeah.
So when you've gone from a world of having sort of 30 active smelters in the US to say 4 over the last 30 years, then you can't turn that around in 6 months. These smelters take a long time to build. You need, they're 25, 30-year outlook projects.
Yeah.
You need a lot of certainty. So I'm not surprised that...
Yeah, and there are midterms in 6 months, so
exactly.
you're not going to get that done in that time frame.
No.
So it probably is not surprising that they're dialing it back a little bit. In terms of buyers, have you seen new buyers come into this space, like typical players that you would not have expected to be involved in precious metals or industrial metals?
I think, well, very recently, I think what surprised people has been the strength of retail demand, both in India and China.
Yeah.
You're talking to very, very large population countries, so even small purchases by a couple of billion people really add up. That's definitely been a new dynamic, whereas traditionally, we used to look to the US markets and the ETFs for retail participation. And what happened in December and January was very much driven by India and Chinese retail participation. It got a bit out of hand, to be quite frank. The Chinese had to sort of make various regulatory changes, increasing margin requirements, position limits, shuttering some of the ETFs to protect people from themselves. But that's probably been the single biggest new dynamic.
I was going to ask about the higher margin requirements, and simply because the underlying asset is so volatile. It's quite mechanical in that situation. Do you think it will deter more speculative buying?
I think so. I mean, it's generally the case. It tends to work as a slightly lagging indicator because obviously it's only when the price starts to get out of control that the margin hikes come. I think the surprising thing about January was how many margin hikes it took to cause the market to top out. But equally, I think the margins will be slow to come down because I don't think the Chinese authorities want to see a repeat of that speculative excess.
What do you think is the biggest risk to, let's say, the long gold trade here? The trend is obviously very positive upwards. Every time I speak to anybody, they talk to me about tailwinds in the space. But what could change this?
Well, the simple answer to that is probably a recession and probably a crack in the debt market relating to AI. I think when everything's going well and economies are booming and companies are borrowing money and spending more money, that's when sort of de-fiatization fears and inflation fears are most intense. If that cracks, and you're seeing the first early signs of worry, not necessarily a crack, but you're seeing Oracle, CDS movements and so on, then you start to see destruction of capital, collapsing money supply, and I think that actually would be negative for gold, even though it would probably outperform because it's often seen as a bit of a crisis hedge as well.
Yeah.
But given what's happened over the last couple of years, I think that would be pretty negative for gold.
Yeah. Guy, great to have you with us. Thanks so much for coming on. Guy Wolf, Global Head of Market Analytics at Marex. Now for a look at some of the other stories we're following. French President Emmanuel Macron will attend this week's AI summit in India as the two countries continue to deepen ties. Macron's official schedule also includes a meeting with Indian Prime Minister Narendra Modi. His visit comes after New Delhi approved $40 billion worth of arms purchases, including more than 100 French fighter jets and missiles. U.S. Secretary of State Marco Rubio and Japanese Foreign Minister Toshimitsu Motegi have reaffirmed their commitment to deepen bilateral ties. Rubio and Motegi agreed on the need to modernize economic security relations and discuss China's latest trade and export measures against Japan. Tokyo's relations with Beijing have been rocky following Prime Minister Takaichi's comments on Taiwan. Western officials say China increased its support for Russia's war in Ukraine last year and is likely to deepen cooperation with Moscow. They described Beijing as the key facilitator of the war, saying the conflict would not be able to continue without ongoing Chinese support. Chinese Foreign Minister Wang Yi says China is not directly involved in the war. And coming up, how the holy city of Mecca is shaping up to be the Middle East's latest hot property market. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Saudi Arabia is opening up the real estate markets in the holy city of Mecca. The move comes as the kingdom faces lower oil prices and scales back ambitious mega projects like NEOM. Joining us now is Bloomberg's Zainab Fatah. Zainab, Mecca is known to be a religious destination, but now also increasingly becoming an investment destination. Talk to us about your findings.
So Mecca and Medina are emerging as the bright spots in this drive to bring in a lot of foreign investment to Saudi Arabia. We know right now that there are projects that are going on in Mecca and Medina in the billions and billions of dollars. And the demand in those cities is very, very high from Muslims overseas who before weren't able to actually own a property there, but the change in the law across the country and allowing it for Muslims only in Mecca and Medina, it means that there will be a lot of funds and a lot of wealthy Muslims who will be able to invest in these holy cities for the first time ever in their history.
There's a quote in your article, and you're referring to George Azar, who's the head of Sotheby's International, saying, "We're selling in Mecca for Monte Carlo prices. Some five-star hotel rooms can cost about $10,000 a night during the holy month of Ramadan." What are the ramifications on the city of these types of prices?
The city itself have been dealing with the influx of people coming into it. And to its credit, the Saudi government has been building up the supply and was able to, until now, when you go to Mecca, you find a lot of supply to accommodate the very, very poorest of Muslims. So there is plenty of accommodation. That's because they've been building a lot of hotel rooms to enable people to come to the city. But also now they're building up on the high-end part of the equation, and that's bringing in a lot of demand from people who want that product.
What does the pushback mean, if at all, Zainab?
So some people criticize that this is going to change the city's character. But even people who say that, they say, I don't envy the job that the Saudi authorities have to do in trying to cater to an ever-growing number of Muslims who want to come to Mecca and Medina. So you have to balance the two.
Zainab, thank you so much. Bloomberg's Zainab Fatah. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, Lebanon says it can bridge gaps with the IMF over its banking recovery plan. We'll bring you the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Lebanon's premier says his government can overcome differences with the IMF over a proposed law that would let depositors recover billions of dollars trapped in the country's beleaguered banking sector. However, the IMF is seeking further clarity on how losses would be allocated and whether the plan aligns with international standards. For more, we're now joined by Bloomberg's Sam Daghir. Well, Sam, you've been at the Munich Security Conference. Earlier on in the show, we were talking about the state of the transatlantic alliance, but of course, so much focus as well on the Middle East, our part of the world too. You've had some fascinating conversations. I'm going to start with Lebanon, because you also had a sit-down with the Lebanese Prime Minister there, and really a focus beyond the politics, the financial situation, how the IMF are perceiving this draft law that came through. I spoke to the IMF managing director a week ago, and she said that they're comfortable with the principle of the distribution of losses, but still has some reservations about the hierarchy. What was your impression from the Prime Minister when you spoke to him about whether they can reach a resolution?
Thank you, Jumana. And yeah, I mean, I spoke to him shortly after he arrived in Munich, and he said he had just been in Beirut meeting with the IMF delegation that was there. And obviously, as you know, I mean, the Lebanon is at the moment in the midst of negotiating a loan program with the IMF. But all the conversation at the moment is centered on this proposed law that Nawaf Salam's government submitted to Parliament. This has to do with the depositors being able to recoup, their money that's been trapped in these banks since 2019. So he said, I mean, it's interesting. He said the IMF as far as he's concerned, I mean, these are his words, doesn't have reservations. He said they are seeking, he said they have observations, they are seeking clarifications on a number of points, including, you know, what you just mentioned, this hierarchy of claims in terms of who gets their money first. And the other issue he mentioned, he said one point that's now the subject of discussions with the IMF is the issue of what's the central bank, you know, what the Central Bank of Lebanon is owed by the Ministry of Finance. The central bank says it's owned 16.5 billion. He says that's not final yet, and he said the IMF is going to be brought into those discussions, and he said we should be able to come up with a figure in a matter of weeks.
Yeah. So, okay. So that's Lebanon. Syria also very much in focus. Over the weekend, Marco Rubio said Syria is headed in the right direction. You had an opportunity to speak to the Syrian foreign minister. What was he telling you about the country's prerogatives and priorities right now with just sort of consolidating power over the full country?
Absolutely. I mean, just very quickly on Rubio, I mean, it's very interesting that he didn't sit in on any meetings relating to Ukraine, Russia. I mean, he sat in with the foreign minister, Asad al-Shaybani, and General Mazloum Abdi, who was the commander of the U.S. allied Kurdish forces, for like 45 minutes. I mean, that's pretty significant. And Rubio spoke on the way out of Munich in Bratislava, and he spoke at length about Syria. He said we were faced with two stark choices, you know, either we just kind of let this country post-Assad fall apart into 8 pieces, he said, and descend to civil war, or actually engage with the new power. And he said we chose the latter. And he said it's not going to be easy. We're going to have bad days, good days. But he said more or less we're on the right trajectory. In my sit down with Asad al-Shaybani, he said basically he was very confident. He said the meeting was basically, I mean, to use his words, to renew, I put that in quotes, U.S. support for Ahmad al-Shara and his government. And he said they talked about a number of issues, including implementing the U.S. mediated agreement between his government and the Kurdish forces and how to integrate them into the new Syrian forces. He said they spoke about, you know, some of the issues that are of concern to many U.S. officials, including particularly members of Congress, you know, the treatment of minorities, and how can minorities like the Druze, the Alawites, and others be brought into the new Syria and to be part of the new government. He said they talked about that. He said they had an honest conversation. He said they also talked about some of the U.S. Recent U.S. forays into U.S. investments, particularly the agreement with Chevron. And as you know, Saudi Arabia has been doing a lot in terms of signing MOUs and agreements with the new government. And the Saudi foreign minister, Faisal bin Farhan, was on a number of panels with Asad al-Shaybani, and he said Syria is a beacon of hope now for the region.
Yeah. Okay, so that's Syria. And then I've got to round up asking about Iran. Massive demonstrations taking place in Munich. More than 200,000 people showed up. I saw that the Crown Prince Pahlavi was actually given a platform at the Munich Security Conference. How much did it feature in the conversations there? And how much optimism is there really that the U.S. and Iran can reach a deal this time around?
Yeah, very much. I mean, Reza Pahlavi, I mean, obviously the former Crown Prince, we have to be precise. I mean, he's been in exile for almost 50 years.
Of course.
He actually took part in a number of panels, including a town hall meeting, and then he held a press conference, which I attended, and basically his message was, you know, President Trump is giving the Iranian regime a last chance, last opportunity. I mean, those were his words. He said. And again, his words is like, this is a waste of time. The regime in Iran is just buying time. And he appealed to President Trump to actually intervene militarily on the side of protesters, on the side of opposition figures like him. And And obviously, I mean, he's a controversial figure. I mean, I asked him about his willingness to work with some of the reformists who had been advocating for change in Iran for years, and who are sometimes viewed by people allied to his movement as being just part of the regime. And he said, yes, we would be willing to work with them if they adhere to 4 principles and renounce their affiliation to the regime and its principles and its ideology. So it was kind of interesting. But again, the message from Pahlavi was that we need the U.S. to intervene militarily, but at the same time, as you know, Gulf states, particularly where you're sitting, the United Arab Emirates, is very much involved and advocating for these talks to continue,
looking for
which is we're going to start in Geneva tomorrow, I believe.
This week. Bloomberg's Sam Dahed from Munich. Thank you so much for a recap, some of the big stories in our part of the world. And just to note, Iran's foreign minister will be meeting the IEA chief and the Oman foreign minister today as well to watch out for. But that's it for our show. Daybreak Europe is coming up next. Stay with us.